What's up everyone, back here for another video. So if this is your first time on the channel, hi, my name is Alex Temez. I've been day trading for over 11 years and I made $11.5 million trading, and we'll pop up my broker statements on the screen right now. So today's video is gonna be a trade breakdown of how I made $450 per minute, and I'm gonna show you exactly where and how I size up into these trades. But before we get started, let me tell you a lesson that'll really take this home. The way that I like to compare trading is sometimes to the casino, because a lot of people treat trading as gambling. It is not, right? Trading is a game of taking uneducated traders' money and putting it into educated traders' hands. So for example, if you're using delayed charts on Google, or you're using a non-direct access broker like a Robinhood, you're at a disadvantage to someone like me with a professional setup. And don't even get me started on all those laptop traders. You cannot beat me on a laptop with this thing. If you treat trading as gambling, you will get gambling results. But let me give you guys a gambling analogy that'll teach you exactly when to size up. In gambling at the casino, you have to place your bet first, and then the dealer gives you your cards. So for example, let's use blackjack as an example. You have to put $100 on the table, and then the dealer starts dealing their cards. What if you had the opportunity to bet after you saw your cards? So if you got a 12, you wouldn't bet. You got a 13, you wouldn't bet. You got a 14, you wouldn't bet. But if you got king, which is a 20, then you would place your bet. Or even better, if you got a 21, then you would place your bet. That's what trading is, guys. So in trading, you don't place your bet until after you see what you want. So in my opinion, trading has such a larger edge than gambling because you are only placing your bets after you see what you're looking for. A lot of traders, when they first enter the market, they think that they should be showing up every day and trading every day and every day and every day. But the reality is that's not what you should be doing. You show up every single day waiting to see if the dealer deals you that 20 or 21, and then you bet on the hand, right? So when you enter the market, you have to wait for that signal, that reason to place your chips on the table, right? So it has such a large edge in trading. I mean, imagine if you could play blackjack and you would only bet if you have a 20 or 21. You would be rich, you'd be retired, and you probably have an island by now. So that's what trading is. Wait until you see what you want and then bet heavy. That's something my mentor Bao taught me, right? So show up to the market and ask yourself, is this a 20 blackjack hand? Is this a 21 blackjack hand? If the answer is yes, take the trade. If the answer is no, you wait and you wait and you wait for the dealer to give you a new hand. So oftentimes, forget the reason that you have to trade every single day. You don't have to trade every single day, but you damn sure have to show up every single day because you never know when that dealer is going to give you that 20 or 21 hand that you could bet on. Now, let's get into my trade review and we'll talk about exactly what I did and when I saw that 20 to 21 blackjack hand. All right, guys, so this is the stock SLDB today. So before I show you my trades, I'm gonna explain exactly what got me interested in this stock, right? So let's first pull up the daily chart. So you can see on the daily chart, guys, that this stock has a history of just kind of downtrending, right? It really doesn't have multi-day moves. Overall, you pull up the daily chart, it just goes back and back and back. And you can see that this is a reverse split stock. So it's never really traded at $840 a share. It's just been destroyed and destroyed and destroyed and destroyed. So the overall trend of this stock is negative, okay? Now, let's talk about what's going on this stock this morning. So this morning, the stock is moving on news, right? So for me, I'm looking at the pre-market chart, and what am I seeing? Well, I'm seeing support here at 675, and I'm definitely seeing some resistance here in the 780s, right? So if I just keep it very, very basic, this is what I'm seeing. I'm seeing support and resistance. So for the stock to go lower, it needs to break under this support. For the stock to go higher, it needs to break over this resistance. Now, what's the next thing I look at? Is there dilution on the name? So I use something called Dilution Tracker. It's not sponsored, not anything like that. So I see that there is an overall risk of an offering. The float is pretty large, and they're burning $23 million in cash, right? They have an ATM offering as well and all this stuff. So first of all, the overall trend of the stock is negative. The stock has high dilution on the name, and there's a lot of other stocks moving today. So my plan on this was to see, all right, if we break under this 674 support, I want a bounce towards the VWAP area, right? I want to bounce towards the VWAP. And if that VWAP area fails, then I'm going to add to my winner and then scale it. So first things first is I've identified that I'm looking to short a bounce. So let me show you my trades and then we'll get into it. The red arrows are shorts and the green arrows are covers. So let's start off with a trade. So I could see that first thing that the stock did is it dipped down and broke that key support area. So when that stock broke the key support area, my thought process is I need a bounce towards the VWAP area to short. So have you ever heard the saying, the trend is your friend? So basically the stock is now downtrending, right? It tried to push up, it failed. It tried to push up, it failed. It created lower high, lower high, lower high, and support. So for me, when this support area breaks, that tells me that the stock is broken. And when the stock is broken, I want to be shorting bounces. I saw the stock break down and I'm looking for a bounce to short towards 7. I slowly scale into my trades, right? I don't go one shot, one kill because I'm not a perfect trader. Anyone that goes one entry, one exit is not trading the right way. It is impossible to time the market perfectly, so ignore that. So I'm slowly scaling into the bounce. It dips down to 630, so I'm shorting 680, 685, 690. Now we're at the VWAP area at 7. So I added more at 7. But when did I see that 20 to 21 blackjack hand? Well, I saw support here. Very simple. I saw support at 686. So what I said is if 686 breaks, that's going to be a 20 blackjack hand and I want to size up. So as soon as that 685 broke, I sized up here, right? I waited for my signal to size up. I got my VWAP rejection, which was my plan, and a break of the key support area, which is my 20 to 21 blackjack hand, and I added. Immediately, the stock has a death candle, and as you guys know, I like to take some profits into the dips. So if you see, I see support here at 650, and I see support here at 630, okay? So immediately when the stock goes in my favor and I make 30 cents a share, I'm reducing some of my trades. I reduce to make sure that I, 1, lock in profits, and number 2, I protect myself in case the stock wants to have a bounce. We get down to the next support level of 630 and I'm all out on the trade, right? So nearly immediately, I made over 50 cents a share on this stock with a little bit of size, right? So now my plan is, all right, I want this stock to bounce again to short it again. Because remember, the stock broke down, it bounced, and it failed. The trend is your friend. So that tells me chances are the next bounce on the stock is also going to push and fail. So what do? I see a little bit of resistance here at 660, but my overall plan is I want to re-short that $7 mark, right? That $7 mark is exactly where it failed last time. So chances are it's going to fail again. So my thought process was, okay, support turned into resistance. So let me take a little bit there, right? And then let me short a little bit ahead of the 7 line just in case it pushes and fails. But if I see it push 7 and break down, I want to add to the winner. So for example, I was probably in about 10 to 20% of my size here. And then I doubled and tripled up my position here, right? When I saw the key area break. So now I'm looking for the next key area, right? So support should turn to resistance. So remember this key support line that we had a little bit earlier? It was around 674. Well, wait a second, guys. Don't you see that's kind of matching up here as well? 674, 675. So the same support from earlier should act as support again. So what did I do? I used 5% of my size here, another 5% there, 5% here, 5% there. Now I'm in 20% size. And then I added to about another 5% here, another 5% there. That brings me to 30% size. And the reason why I use 30% size is I have a rule. I am not allowed to use more than 30% of my size until the stock confirms. So that 30% of my size is more of like a feeler to kind of get a piece of the stock, to kind of get interested in the stock and get a little bit more involved in the stock. I will not add past 30% until the stock confirms. So what ends up happening? Locked in my profits here and now risking a little bit of my profits on this next bounce. I'm in 30% of my size and wait a second, the stock pushes up over 7. But oftentimes when you're trading these small cap stocks, guys, they try to push the stock into key levels, get all the shorts to cover, get all the longs to be bullish, and then snap, they destroy it. But none of that matters until the key area breaks. So I identified that 686 was the key level here, and now I identified that 677 is the key level here, which also syncs up with the support here. So you see how support, it all is in sync, right? So as soon as we push over 7 and we death candle under, I'm trying to be very, very patient and waiting to add until I see that 677 area break. I got a little bit of FOMO and I added at 680, which was kind of perfect. As the stock dips down, I take some of my profits. As we dip down to support, I take about a little bit more of my profits. And at this point, once again, I'm at 50 to 60% of my size. So I'm in, 20 to 30% key level breaks, size up. I'm in 20 to 30% key level breaks, I size up. And the same way that I took some profits into the dips here, that's exactly what I did here as well. I took some profits into the dips. Now, unfortunately, I covered a little bit too early. The stock halted down and then just completely got destroyed. But all I needed was this one trade. And if you look very closely, 1 minute, 2 minute, 3 minute, 4 minute. My first trade was 4 minutes. Now, 1 minute, 2 minute, 3 minute, 4 minute, 5, 6, 7, 8. 8 minutes. So if you do the math, 8 plus 4 is 12 minutes. So I traded for a total of 12 minutes today, and I made over $5,000. Let me show you that. $5,493. So if you just do the math, $5,493 divided by 12 minutes, I got paid $453 per minute, or $7.50 per second, guys. So the main thing that I want you guys to understand about this trade is where I decided to size up, right? I didn't just size up as it was going against me. I made my plan to short at 7. When the stock broke my key support area, I sized up and I took my profits. I didn't get greedy. I didn't say, oh, this thing is going to break down. It's going to have an offering. It's going to go to $2. Had I done that and not covered, I would have probably stopped out here and ruined the entire trade. But by reducing some on the dips, you could never go broke taking a profit, and it allows you to risk some of those realized gains to make the next trade even better. And then I reshorted the stock with the same plan of 7, right? Could you have said, well, Alex, why didn't you stop out here? Well, I was still only in partial size, and I wanted to see what the stock would have done. If it continued higher, I would have had no problem stopping out. But the stock ended up failing, breaking the key support area, sized up here, took my money, and ran away. I should have been more patient. Had I been a little bit more patient and held for another, hour, I would have made an extra $5,000 on the day. But it's never a dull day when you're making $5,000 in 12 minutes, guys. So that's exactly how I sized up into the stock. I'm waiting for key areas to break, and then I'm sizing up. I'm taking the money and walking away. So let me know if you guys like these trade breakdowns. Let me know if you want to see more things like this or what type of content you want to see from me. I'm also going to be attaching some live trading videos here, and please subscribe to the channel here. Leave a comment, let me know what you want to see, and I'll see you on the next video, guys.